Welcome to Banking on Community, a podcast that explores how community banks thrive with the leaders who run them. I'm your host, Deb Barnes, a banking strategist and AI advisor with 18 years in banking and financial services. I help banks transform through data, analytics, and automation. Today's guest is Andy Montgomery, CEO of FMS Bank, a longtime community banker and entrepreneur with experience leading both community banks and large-scale banking operations. In this episode, Andy shares how he's charting a bold new path for FMS Bank, one that blends digital innovation with deep community roots. We dive into how he's building a new front door to engage millennials and Gen Z, why collaborating with peer banks may be the future of sustainable growth, and how AI can support, not replace, personal relationships in banking. Let's get into it. Okay, well, thank you for joining me today, Andy. Why don't we start off if you could share a little bit about yourself and FMS Bank?
Yeah, so I'm the CEO of FMS Bank and have been the CEO since last October. Been in the banking business for about 30 years and have worked for money center, very large banks, regional banks, and then got the opportunity when I was relatively young to found a de novo bank in Utah and grow that and be its CEO for almost 15 years, and then simultaneously another one that's why I asked about Riverside, another one in Southern California in the Palm Springs area. Built those up from the ground up and ran those, and so had a community bank foundation and background and loved community banking. Then went out to Texas and ran the community banks segment for a very large multinational bank that was out of Spain in 42 countries. $600 billion bank that had bought a roughly $40 to $50 billion bank out of Alabama, that had bought a bunch of community banks in Texas and threw them all together at one time right before the financial crisis. So there was a turnaround culture challenge when I went out there. Got out of banking for a little while, started a consulting company, which is still going, started a nonprofit, which is I wrapped up, and then a little over a year and a half ago, came to FMS Bank as its chief credit officer to kind of help re-risk a program that has been very important to the bank, but needed some changes to it, and not thinking it was a long-term assignment. I was doing a lot of consulting also prior to that time with fintechs and other businesses. And then tragically, our CEO passed away unexpectedly, and the board asked me if I would like to assume the role. I said yes, but if I've got a vision, if we aligned on the vision, then I'm interested. If not, I'm probably not your person because I'm not a good presider necessarily. They went on a search and interviewed, 14 different candidates, and then finally came back to me last fall and said, we want to align with your vision. We want you to execute your vision. And I thought, now I've got to actually do this. And so here we are.
Well, that's an awesome journey. And why community banking? So you have had this long history now in community banking and you keep coming back to it. What is the love of this space?
Well, there's a few different things that are attractive, especially if you're entrepreneurial, right? One is just when you understand the role that community banks play in communities, the role they play with small businesses. I've probably over the course of my career, I never really have added it up, but it's got to be somewhere near 1,000 businesses I've walked through, taken the nickel tour, talked to the entrepreneur, looked at their financials, provided advice, and have had the opportunity to be there at startup, scale up, mature businesses that just are tinkering. And then, in boom times and some lean times, and really standing by those businesses in lean times and trying to be value add and working with those businesses. So if you love doing that, a community bank is an optimal place to be. And you're delivering decision makers close to the customer. So there's really power and value in that. We'll give you a decision right away. We'll do it on your time, and we'll be flexible. We're listening to your story. We're not doing things in a box. But beyond that, Deborah, it's the idea that in the community bank, you can move walls pretty easily and be agile and be entrepreneurial if you have the right bank and you're imaginative, which not all of us are in the community bank space. but I certainly and I think our board is. And so we have a board of entrepreneurs that are willing to listen and evaluate new ideas. So I'm very fortunate in that regard.
That's awesome journey. So tell me a little bit about your typical day. What does your typical day now look like? So hopefully still meeting with those entrepreneurs, but what does it look like?
Yeah. Well, I always want to be meeting with the entrepreneurs. That's the best part of the day. I look at today and, it's being the CEO of a community bank means you are being agile every single day to dealing with multiple different issues. So for someone that likes doing the same thing over and over again, this is probably not the spot to be. You could be dealing with retail issues or lending issues, financial forecasts, compliance, regulatory issues. And I probably dealt with each one of those at some point today. And so we've got a specialized program that ancillary revenue that's unusual for a community bank like ours. And so I spent a little time on that today as well.
Wow. Very, very busy and like lots of twists and turns happening on a daily basis. So would you tell us a little bit about the industry? What trends are you seeing or what shifts are you seeing in the community banking industry?
Well, before 2 weeks ago, I would have answered this just uniformly that the biggest challenge that we face as an industry is relevance. Right. So I went from running my community bank to going to that big bank that was going from traditional to digital very quickly. And as an executive of that bank, I was brought into this concept of reimagining banking for the future and then staring at demographic trends. And that was 10, 12 years ago. And so I've been obsessing about this because at the time I said, how would I manage my community bank through these trends? How would I stay relevant knowing that these things are going to occur? And what I'm talking about, of course, is millennial and Gen Z's preferences, their patterns of behavior, and how you make community banks relevant to those patterns of behavior, which are far different than baby boomers and Gen Xers. They're not coming into the bank. They are not coming to the bank, and the speed of communication and their expectation of communication and the speed in which money moves through payments. If you're not focused on that as a bank CEO, you're of any size, you're probably committing malpractice to that bank. So if you're not focused on AI and how AI is going to be a tool, but also change the whole relationship of how you're doing things, again, I think you're not doing your bank's service. So I think that's the biggest hill and challenge. The vision that I had with our board is to say, we need to make this transition because what we do still has value to it. There's value to quick and immediate decisions. There's still value to the consultative role that community bankers play with their customers. But customer acquisition is the big problem. So how do we let millennial and Gen Z know that value so they're not going to a fintech alternative, but reaching out to their community bank or taking, accepting our outreach when we reach out to that. So that's the big challenge. And it is also a big challenge for any community bank with limited resources to take on themselves. And so I'm working on actively creating an aggregated solution with other community banks. So we stopped looking at each other as a competitor, but 1 out of every 2 new accounts that was open, or almost 1 out of every 2 last year, was in a digital only bank. That's the competitor, right? That is the big trend that is the Blockbuster going to Netflix or the Sears going to Amazon, right? That you're going to be on the wrong side of that equation, and we have to work together to aggregate our balance sheets and resources in order to create solutions there.
Wow, that's a great vision. I love that. I'm an AI advocate myself. It's my background. I was wondering in particular that very question about the scale and the location. I'm doing that in air quotes, meaning physical or digital or what have you. So that's really interesting. And that approach too. Okay, so what's working really well? So those are some challenges. What's working really well right now?
Well, it's still our value proposition with our customers. So we have, one of the pleasant surprises when I walked into this bank is that people generally don't like their bank. Right. We're not the worst. I mean, we're not lawyers. We're not on that scale, right? Or some of the really hated professions, but especially as you skew younger and for good reason, people don't like banks. They like community banks a lot more. And so when we do our customer polling our net promotional scores, there are banks that are here, and then there are community banks that are here. We're up here. So what we're doing in our relationship with our customers is really working. They like us, right? So let's understand that. Let's not change any of that relationship with the customer, because that is really working well. Bank is doing well. It's profitable. We don't have any material credit issues, which are really usually where concerns manifest themselves. Our balance sheet's in good shape. So really, I mean, most things are going well inside of our bank right now. But if we don't make this transition, in 5 or 10 years, I don't think we'll be able to say that.
Wow. That is amazing. Those net promoter scores, sky high. Congrats to you for that. I mean, that's
Thank
a
you.
huge
Well, it's not
accomplishment.
me. I've only been with the bank for a year and a half, so it's a
So
culture
everyone
that
else
was
has
here.
been doing a really great job.
Yeah.
That's fantastic. And the credit piece too, super important. I mean, that's what breaks a bank, right? That's what'll take
Right.
you down if you're not in the right position. So that's
That's
great to
right.
hear. What metrics are you focused on? So you mentioned net promoter score. What else?
Yeah, so we're focused on net promoter score. We're focused on, I like to say there's our kind of image, because where our bank was established as a rural community, and there's a windmill outside of our bank. And so that's become the icon of the bank. And I'd like to say that the three biggest propellers of those windmill propellers for us are customer, community, and team. We've got metrics on customers. Obviously, we've got metrics in the community to understand where we've got the right reach, and then team to see how our team feels about how we're doing. So those are three metrics that we look at. Beyond that, we're focused on a few initiatives where we've got established metric. We'd like to expand more into SBA lending, so we have some intentional there. Net new customer growth. We've done a good job of leveraging up our customer relationships, but we've got to get into a point where we're bringing in new names to our bank all the time. And that is, again, becomes critically important as you look at the transition of one generation to another, in wealth and in business ownership. If we don't have an active way of reaching out to net new businesses, we're going to be left behind.
I think that ties back, your story is consistent from the top, right? The customer acquisition, finding that new generation, the younger generations, and finding them where they are and finding that connection, that same relationship that you've built with the rest of your customer base. Wow. And do you think that is unique for your bank, or you think that's pretty common across all of the community banks?
Boy, I wish it was common. I wish that more banks that are smaller, say under $1 billion in assets, were more proactive in thinking about these things. So as a group, I mean, we're just not the most imaginative, creative, innovative, fast-moving group, where we generally like to move in herds. And so, but I think that there's a forcing function that's coming, right? And to me, bankers are used to dealing with crises that are big bubbles that pop, right? And we have to deal with them, asset bubbles, for example. But this is a slow leak. So we've got to be dealing with the slow leak. And I think a lot of bankers out there, because I've been the last few months on a tour of going to different conferences and meeting with different bankers and understanding different strategies, I think there is overall an understanding that something needs to be done, but there's not always acute ideas of what needs to be done or the resources. A lot of bankers that are under, say, $1 billion in assets are thinking mergers and acquisition. And I just don't think that's going to happen. I don't think it's going to happen in any way, shape, or form that in the way it used to. So first of all, a lot of the mergers are non-accretive when you put smaller banks together. And there's a lot of barriers in terms of costs because they're on different core systems, or they've got unrealized losses on bonds, which then they would have to take, that are going to prevent that. But it's also you're kind of investing in a legacy system when things are moving forward. And if you don't have an acute vision on how to move forward, there's probably not a lot of acquirers out there that are going to be, especially in organically growing area, is going to be interested. So at some point, you're going to be forced to do different things.
Yeah, that's interesting. I've heard from others that mergers and acquisitions trend. So, and not only, I guess, amongst community banks themselves, but like, let me get big enough so somebody will buy me, so to speak, right? Let my book be attractive enough that someone will buy me. But you're saying that may be too high. Those legacy systems, that'll be the barrier to entry for that.
Well, yeah. But that was the playbook, 20 years ago. And
Yeah.
still, we're still kind of stuck on that. But if you look at one bank, the number of banks have shrunk down to about 4,600 in the country from 8,000 20 years ago, right? And then you look at the regional space that might be the most logical acquirer, that shrunk down even more and has some problems. The big banks are just not going to acquire community banks. They don't show up on the radar. They don't have a need to do it. And unless they've got a really particular organic strategy that's going in a specific region and you're part of it, they may likely just do that in building de novo buildings rather than do it. But that's happening a lot less anyway, right? Because you don't need an organic brick and mortar strategy when everything's going virtual and digital in the world. So that, this is sort of the idea that you're still solving a problem or trying to create a solution from 10 or 20 years ago, which may not be relevant.
Where do you want to be 6 to 12 months from now? So you have some visions for the group, and your board said, let's do it. So what's your vision for the next 12 months?
Yeah, to me, I want to make material progress on multiple different fronts at the same time. So we're already moving forward on what we call our new front door strategy. So we've got our existing front door, which is a traditional way we've served customers and the way that the customers are used to interacting with us and communicating with us. We want to have established new front door, which is more for younger generations and going to, as you said, which is a very good way of saying it. I love it when I hear this. Go to where they are. Meet them where they are. Right. And so they are on here. Right. This is part of it. Right. So they're virtually communicating and they are being influenced in different channels than they used to. And so you have to look at where they get information, podcasts and social media, TikTok, if it still exists, who knows what's going to happen with it, YouTube. And so you have to be kind of working in those channels, because when I first started a bank in 1998, you had print, you had radio, you had television, all which were the effective mediums of how you communicated your value proposition to your customer. Now we have to rethink that in a totally different and relevant way, and we are. So we're taking some chances with that. So we'll see if there's some material success there. Then on this aggregation of bank strategy, I'd like to have that put in place, and that really generating new technology ideas and new revenue sources.
That's fantastic. I love the new front doors. Like, come over here. It's built just for you. It's just right. So tailored, right? I think that's also part of the expectation is there's that balance of, you know me, but you know me too well, and I think that is an expectation of this generation, is much more expectation of, more about me when I'm coming in. And so you can tailor, to my experience.
Well, and they want the personal relationship, right? So they do want the personal, and you bespoke the personal relationship. But if I'm on a Zoom call having that personal relationship versus inside the branch, and we've influenced them, and I'm giving them value add in education of things that they didn't know about, that's what everything I'm seeing that's resulting from polls of millennials or Gen Z is there's still this concept of influencers and hacking things that they don't know, but they just don't want to have to come in or, God forbid, call someone in order to find out that stuff.
Yeah, the texting, the chat, the interactions, chat bots are super helpful. Then that connect into agents and all of that.
For us, the balance is having a person on the other end interacting. Because if it's all technology, we're going to lose, right? The JP Morgan Chase can outspend us in a second. We can spend in a few years. But at the end of the day, we're banking on the fact that they're going to want to connect to a person at the end of that process, maybe in a different way, but they're not going to want to just deal with a bot. But a bot will be efficient for them. But then when they need a person, that we're right there.
We're right there, ready to jump and give you that advice you didn't know you needed, because we've also been mining what you're telling the bot. And now we know, hey, this person actually has a need for, I don't know, an auto loan or whatever it is. And we can help you with that. But you didn't come to talk to me about that, but I know, so I think that That's
Yeah.
a great potential interaction there.
Yeah. And we're trying to get creative of what other interactions can, because we're our bread and butter are small businesses, right? That's how the primarily way that we make money. And so what other services can we provide them that are atypical and out of the box, but needed? So
Mm.
if I've got a younger business, maybe they need accounting or bookkeeping support, right? Because there's a gap there. And we know that that's a gap. So that may be the immediate solution, but we're seeding in banking services along with that and keeping them as a very stable customer because we're wedded into their ecosystem.
Lots of innovation, lots of ideas. And I love the idea too of young entrepreneurial ownership as well and having a place that is fit for them, right? I'm new.
Right.
Maybe I didn't go to a job. I'm starting as an entrepreneur straight out. How do I even do that? So I think that's a really
Well,
interesting space.
and I've been walking around businesses for 30 years and then consulted a ton of businesses. So you've got great entrepreneurs that are building businesses and have phenomenal ideas and tremendous builders, but maybe they've got a gap on the financial side. Right. And they need some help with that. They need some advice with that. They need, and that's not uncommon at all.
Yeah. Yeah, that makes a lot of sense. Okay, so if you could solve one major challenge today, like you just had to pick one, what would it be? Knock it out of the park.
Yeah, I am so tempted to take on the tariff
Well,
catastrophe. Boy, that's a tough question. I would like to see a quick resolution to what I think is a self-inflicted wound here that's going to cause some destruction on the tariff issue. So we, even before the tariffs that were announced, that is 2 weeks ago, 1 week ago, it's all been a blur. I saw a couple of business surveys of business CEOs that were really alarming to me. And it was the uncertainty factor of CEOs was higher than COVID. It was higher than 2008. It was a little bit higher than just after 9/11. That was prior to these surveys. So what that tells me is, and we saw consumer confidence today drop, and that's not always the best barometer. But these things together indicate to me that we're going to be in for some economic challenges. And the longer the tariffs remain uncertain, the tougher those challenges are going to be.
so what do you do inside of your business to address that uncertainty?
Well, I think we are pretty good risk evaluators for a bank, and we come at it from the right place with the customer. We always want to, on a credit decision, for example, say, how do we do this, right? How do we do this, and how do we de-risk this enough? But we've made some good credit decisions, and in some more volatile areas, we're not exposed, oil and gas or agriculture too much right now, where you're going to see that. I think our balance sheet's in really good shape. So we've got a lot of liquidity. We've got a lot of capital. We're conservative with those things. And so
Very
I
strong
feel,
financial strength there.
yeah. And I think it's about the best you can do is, I remember running a bank and writing a memo to my board, used to write memos back then, and the board, in 2005 or six saying, we need to, basically batten down the hatches and stop lending, keep our powder dry because we're going to hit the worst, a terrible financial crisis. I was 2 years early. The board told me to take a vacation, but, back then you saw a man-made catastrophe also occurring, in terms of the financial crisis. I don't think we're in that type of position here, but it's, there's only so much you can do to prepare.
Yeah. Okay, any final thoughts from you? Like, what is your big takeaway? What's going on in community banking? What are the most important things? Final thought.
This is a constant theme with me, is that if we don't adapt, we're going to die the same way that there are no more Blockbusters or Sears around. We've got to revise our business model and accept the inevitable. So there will be fewer banks, going forward. I have no doubt about that. It's just, I would love to see more of my industry really be on the forefront of trying to adapt their models right now.
What a powerful conversation. Andy gave us a real behind the scenes look at what it means to lead a community bank through digital transformation, all while staying true to its roots. A few things really stood out for me. Relevance is the challenge and the opportunity. Andy's new front door strategy is all about meeting younger generations where they are. Aggregation is the future. Whether it's technology, marketing, or shared services, smaller banks can go further together. And AI doesn't replace human connection, it should enhance it. That combination of automation with real, personalized service, that's the community banking edge. If you enjoyed this episode, please share it with someone else who cares about the future of community banking. Until next time, I'm Deb Barnes, and this is Banking on Community. Thanks for listening.